Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today I have with me Tomer Kashi, co-founder and CEO at VOOM Insurance. Tomer, how's it going today? Thank you for joining me.
Amazing. Thank you for having me. It's a great pleasure to be here.
Awesome. And I see daytime behind you. So are you currently in California?
No, I'm in Tel Aviv at the moment.
Oh, okay. It's end of the day for you.
Like you could call it end of the day. I have many more meetings later on today.
Okay, so we're recording at 11 a.m. Eastern time, so it has to be evening or like late afternoon for you.
Yeah, for us it's like 6 p.m.
Okay.
Evening, yeah.
Okay. So we always give the guests to give the elevator pitch. What is VOOM?
Okay, sure. So maybe, first of all about myself, I'm Tomer. I'm the co-founder and CEO of VOOM. I'm a tech geek, computer scientist and physicist that somehow became an insurance nerd. And VOOM is an insurtech MGA creating usage-based insurance products for underserved segments within the mobility world. More specifically, for each and every market, we usually take one or more sources of data that other insurers are basically blind to, and we utilize this additional data sources in order to provide, better and fairer insurance solutions for the end customers. So, if I want to maybe elaborate on it more and talk about mobility in general, so I think that the mobility industry is changing rapidly across, many different pillars. One, you have new platforms such as, e-mobility and drones. Secondly, you have new types of utilization such as rideshare, car share, deliveries. And third, you have increased connectivity that allows for better underwriting, allows for embedded insurance. And, all of these shifts are creating needs and opportunities to create new insurance products with, potentially huge value. And the problem is that for insurance companies, one, it's very hard to innovate in general, but maybe like product innovation to create an insurance product for a specific segment, that's probably like the toughest of problems because it's very interdisciplinary. You need the risk and actuaries. You need the IT people that have sometimes, systems written in COBOL in the 80s with tons of spaghetti code. You have a lot of channel conflicts. You have, it's really complex to create a new product. And I do respect incumbent insurance companies. I do think that they have the ability to create the best of breed product for car insurance or for home insurance or for any other, I would call it like mainstream market. However, there are many, I would call it niches, but this could be, billions of dollars of niches that are basically underserved from an insurance perspective. And what's most important is that the customer is left behind. And they can, just maybe give you some examples of products that we have created. So the first product the company has created is a product for the commercial drone industry. So a very, unique niche that obviously, is very, very specific. It's, an emerging market, complete new risk, no history. And, there was a need for basically a tech company to create both a risk model and distribution model around this market. And we've created pretty comprehensive product, both an on-demand hourly policy and the monthly policy and the annual policy. And today it became the leading commercial drone insurance solution in North America. We do it, by the way, under another brand called Skywatch. And we recently expanded this Skywatch brand into other niches within the aviation world. We have a product for light aviation, for small planes, that is also very successful. And under the VOOM umbrella, we also create other products for things with wheels. And also, I think that they share a lot of similarities to the things we do in aviation, things that are relatively high risk and episodic in usage. So a product that we're very proud of, that is, I think, 6 months in the market now, is a product that we created for the motorcycle world. And that's, I think, both very unique and also gives a good example to what we do differently in this market. So motorcycle insurance is not new. There are dozens of insurance companies providing motorcycle insurance. And also, you won't be surprised to know that when someone is riding more, there is more exposure, so there's more risk for an accident. And again, you won't be surprised to know that 70% of the riders are riding less than average, right? The median is higher than the average, and yet today these 70% of the riders are overpaying for the 30% that are very lucky to have time to ride a lot. So VOOM has created the first pay-per-mile insurance for the motorcycle industry. And again, while the pay-per-mile concept is validated from an actuarial level in cars, no one has ever created it before for motorcycles. So we already talked about 3 products in the market: drones, aviation, motorcycles. There are several other products in the making, and all of them are built on the same, I would say, like tech stack that we've created here internally. 3 things that in my mind we're doing quite well. One is risk analytics, the ability to take telematics data, API data, and provide some kind of a risk score for the usage of the vehicle. 2, we've created our own born in the cloud policy admin system that allows us to take this risk score and really provide a flexible policy, either on demand or based on mileage or any kind of other flexibility in the policy. And 3, distribution. We're licensed in all 50 states as an agency. We have just a tech stack that allows us for flexible distribution, either directly or via brokers or via APIs, what today commonly used as embedded insurance. And this allows us to create a new product instead of in 3 years, in a matter of months, and really to serve for these underserved verticals and to provide better and better solutions for our customers.
Okay, that was quite a lot. Okay, so the drone product, the first product. So basically, you took a look at the U.S. insurance, and you're like, okay, so drones are becoming a big thing, and nobody's providing commercial drone, but there's no data, right? Like you mentioned that there was a lack of data. So how did you go about creating these products in an area where we didn't have a lot of data for the actuaries to play with?
Yeah. Okay. So actually, like this product was really, really interesting because drones traditionally are underwritten under aviation. So it's an aviation policy. So the same people that have insured jet planes or satellites needed to insure this, $1,000, $2,000 drones that are only like a few pounds of weight. And when you looked at these applications for this insurance, you saw really weird questions such as what's the engine type of this drone, although everything is electric, or what's the experience of the operator, although everybody was completely new to the market, so the experience is usually like a few months. And frankly, we were at the same boat with everyone. Like almost no one knew anything about the nature of the risk. We, to begin with, managed to just collect data on hundreds of thousands of flights in order to assess the frequency of loss. We didn't know anything about the severity, and created an initial model. And then over time, with the telematics, we found, we've improved our model. We also started with a very, specific product, only on-demand hourly policy for, I would say, like the gig economy. And eventually we created products, for bigger fleets. We have today everyone from, a wedding photographer that needs to show a certificate of insurance to the venue, to drone light shows and drone delivery companies, and many others.
Okay. So you collect data. You have an idea of the the potential losses. How did it go? Getting paper, getting reinsurance backing, and getting support from the Department of Insurance to be able to launch a new product.
Yeah, so we were lucky enough to partner with basically a carrier that they had a drone product filed, so they already had something in the market, and together with them we've created a program. I think that for this kind of solution, it was a better solution from a go-to-market perspective, just a faster go-to-market than creating a reinsurance panel in the front company and just to start a product from scratch. So we tended to do what we are really good at as a tech company, to create a model, to provide a policy admin system, to go to market, and relied on valued partners to do the filing, claims, and to bear the risk.
Okay, so the drone program got off the ground. Why motorcycle next? And the reason I ask is because drone, there just was not a lot of offering. Motorcycle, there's a ton of offering, right? Like Geico does motorcycle, Progressive does motorcycle, a lot of other carriers the motorcycle. So there's not a lack of availability of motorcycle insurance. So why motorcycle next?
Yeah, okay, yeah. Just one anecdote, you would be surprised how many competitors are there in the commercial drone space, especially given the size of the market.
Okay.
We are the leader there, but at least according to Google and other sources, but not due to lack of competition. But now to motorcycles, I would start with why mobility. Okay, and I think that the mobility ecosystem in general has two merits that are really interesting for us. One, it's changing rapidly. There are a lot of things that are happening, as I said, new platforms, new types of utilization, and more connectivity. And two, specifically the connectivity. So there are today more sources of data that could be utilized in order to underwrite risks more effectively. Things that are, I would say, like harder in, I would say, let's say, small business insurance, in which things are not connected from the get-go. Now, with that, I think that something that is really relevant for UBI is products that are high risk and episodic usage in nature. And I think that motorcycles, just like commercial drones and light planes, are a prime example for that. It's not used a lot, but when it is, it's quite risky. And hence, when you are able to analyze the actual usage type and the risk and the profile and so on and so forth, you can really provide meaningfully better segmentation of the risk, and at least for a certain portion of the population, a product is much better than everybody else. So while everybody, and there are a lot of companies are investing a lot of marketing dollars into motorcycle insurance, the way that we are looking at it is that they are competing on the color of the logo and the look and feel, and maybe how easy it is to buy insurance. That's like InsurTech 2.0, the customer engagement, how easy it is to consume insurance. And we're looking at it from a more fundamental perspective. We're changing the insurance product itself, and not only how easy it is to buy, but also the risk model, what we call internally InsurTech 2.0.
Okay. It's surprising that nobody had a by the mile product, given that we've had it in auto for a while. So you come up with a by the mile product for motorcycle. How do you track the mileage? Are you asking the customer to give you access to tracking on their phone, or is there a device like there is for cars, a telematics device that you can just connect to your motorcycle, or how does it work?
Yeah, so that's a really interesting questions that we had internally. How to collect the mileage in a way that is one with minimum hassle for the rider, to make sense from a unit economics perspective. And obviously you're familiar with many ways to track mileage, from hardware to others. We decided the best way to capture mileage in this kind of product is by a picture of the odometer. So once a month, a customer is getting a text message asking to take a picture of the odometer. And according to the change in mileage, we know exactly how many miles they have ridden. Now, I think that this kind of solution is especially relevant for motorcycles because of two things. One, there is no hardware involved, so there is no upfront acquisition cost that is associated with the hardware. And two, specifically motorcycles, a lot of riders are deterred from being tracked. However, all of them are thinking that they are riding less than average. So they are not deterred from sharing their mileage in order to save money. And that's what's most relevant for motorcycles. I do believe that over time, motorcycles, like any other vehicles, will just become connected from the get-go. So we see it as a temporary solution anyway, but that's the way it works now.
It is very interesting, because you're a tech company, right? And as a tech company, I very often run into insurtechs who suffer from this problem, where because we have the technology, we want to use it, right? So I like the way that you analyzed that the question, how do we get the mileage for motorcycle, and realize that, yeah, even though we're a tech company and we can design something for to an app or something to track this in the way that would feel most natural to us as tech people. The personality of a lot of motorcycle riders, and the way that they use the motorcycle is such that a simpler solution, like taking a picture of the odometer, makes more sense.
Yeah, I agree. Let me give you an anecdote of it. And I think that just because we came from the technology world, now we're like brave enough to say how technology could really serve the product and not the other way around. But let me give you an anecdote again from the commercial drone world. So in commercial drones, we take telematics data from the drone, the height, the speed, the battery level, communication link, how you close to trees, are you flying over people, like tons of potentially relevant data. And now that we have that we have tens of thousands of customers, hundreds of claims, we found out things that we didn't even think about that are super crucial for the risk. So for example, the email that you are registered from to our service is actually a really a very predictable factor to how much you're gonna have a claim later on. So that's a story about over design, and the difference between what you think at the get-go when you create something or create a risk model, and what actually happens. And that's basically a lesson for us, to start simple, to be agile, and to change things along the way. And if, specifically mileage in motorcycles, it has 500% influence on risk. Okay, so the highest mileage tiers is more than 5x more risky than the lowest mileage tier. So that's one source of data in addition to 40 others that are already taken into account by all the other carriers. That is already a crucial factor. But maybe there are others, and maybe in the future we will add other sources of data. But it's okay to do it on a step-by-step basis.
Okay, how are they distributed? So is it only direct to consumer, or do you go through the brokers also, or how is the product distributed?
Yeah, so we see ourselves as a product company and not necessarily as a marketing company. However, we do understand that marketing and go-to-market is a crucial factor in bringing the value to the customers. And our strategy is basically an omni-channel distribution strategy, meaning a combination of direct-to-consumer and brokers and embedded insurance. Specifically speaking, I think that since we go after niches, it's easier for us to distribute such a product. So the value of referral programs and the value of customers are just happy with the service and have fellow riders that they could recommend them our product is much higher than in products that are not community based. Okay, so this helps us with the direct to consumer. We call this really happy customers that influence others to join us, the super spreaders, as an equivalent to to COVID. And we do see, thankfully to our service and to the product and to these people, several super spreaders that really help us. Secondly, yeah, we have a strategy around agents. We have already agents that that work with us and are able to provide the VOOM product to their customers. We're always open to speak with more agents that are specialized in motorcycles, and obviously they can reach out to me after this episode.
Okay. So do you have to, as an agent or a broker, do you have to have a certain size of a certain number of motorcycles that you write, or if I've got a couple of motorcycles in my book, VOOM would be happy to work with me?
Yeah, so we're flexible on that. We don't have strict minimums. On the other hand, it's a new platform that you need to know how to use. So if you see that you have one or two motorcycle risks that you want to write a year, then probably it won't worth our time or the broker time to learn this new system.
Okay, but for brokers that do a lot of motorcycle, it's definitely a great new offering for their.
I'll tell you, from our conversations with brokers. Okay, so each and every time the customers are calling them, even about their existing motorcycle policy, and just complaining that the rates went higher, and now with inflation, it's very apparent. And now basically it's a tool in their toolbox saying, okay, it went higher, maybe want to go for pay-per-mile, and they have something, and otherwise sometimes they just lose the customer. They go somewhere else, they are searching online, they're canceling the policy whatsoever, and that's basically a tool for them to to keep the customer and enjoy the other things. Usually these customers are buying other kinds of insurance.
Mhm.
You know, it's surprising that 1 out of 5 households in the US holds at least one power sports vehicle, either a motorcycle or an ATV or UTV. So while the market segment is very specific, it really touches a lot of families in the US.
Makes sense. Yeah, and families that have multiple insurance needs. So they're a great fit for agents.
Well, yeah.
So Tomer, thank you so much for your time today. I'll tag you on LinkedIn when it goes live, and I'll tag both VOOM and Skywatch. Great chatting with you today.
Tony, I really enjoyed the conversation. Thank you very much.
Awesome. Thank you.